Our next guest says the D.C. drama will lead to even more pain for stocks. Let's bring in former U.S. senior Treasury official Kim Wallace. Now he is the managing director with the Eurasia Group. Kim, great to see you.
Hi, Melissa.
We were talking about a government shutdown and the fact that in any other sort of market, this event in and of itself may not be a market mover. So what exactly do you think has investors looking twice at this event this time around?
Everything you all have been talking about. Markets matter, or Washington matters most to markets if there's a suffer in fundamentals or sentiment. We're going through both right now, and Washington is not showing up to restore confidence. That's why there's a focus on this. You're right. From an economic and financial standpoint, if there is a shutdown, and even if it lasts for 2 weeks, that won't matter to anybody except for the workers who don't get paychecks during that period. Yeah. This is a confidence game, and right now we're losing the confidence game.
So in terms of extrapolating what this D.C. dysfunction may be, what is the first thing that investors connect the dots to? This dysfunction in Washington may mean this doesn't get passed or this other thing doesn't happen. What do you think?
This means that as we go into the first half of next year, particularly the first quarter, and you have tests of a divided government on how it wants to deal with fiscal policy, both debt ceiling, funding for 2020, all of those issues will have a sharper edge to them going into the debate, and then markets will be more keen to watch how it's conducted because of the lack of confidence from this episode.
Hey, Kim, it's Tim Seymour. Do you think anything is going to change in terms of either monetary policy? We've heard a lot from the Fed over the last couple of days. But from the perch that you used to sit in, either whether the dollar is in a position that it could continue to possibly weaken. This is another thing we've been talking about on the show because a lot of people had bet in favor of a stronger dollar. With fiscal doing what it's doing, with the economy doing what it's doing, do you have a view there?
My view is that Powell was pretty clear yesterday, and the statement was clear from the committee. They're going to normalize both in terms of the portfolio and in terms of rates as long as they can. And right now, they're a lot less concerned about, frankly, the markets, or for that matter, elected politicians. They're much more focused on the fundamentals, which they find to be acceptable in the near term. And they're really focused on trade, the issue with China that you all have been talking about.
And specifically on that issue, Kim, we learned today that the U.S. is bringing charges against 2 Chinese nationals when it comes to cyber espionage, corporate cyber espionage. How does this influence the trade talks?
Well, it has to have an effect because, again, it's all about building trust when you sit down to a negotiation. And there's very little trust between Washington and Beijing right now. So as we go through every one of these episodes, whether it's Huawei or the recent espionage charges, that will give bureaucrats on both sides reasons to pull away from the table, whether they're real or trumped up. No pun intended there. People will have a hard time sizing the market for a healthy negotiation. That adds time to the back end.
So that's interesting because initially when I thought about the CFO being arrested and this event also, you think maybe it gives the U.S. more leverage in some respect to demand more things out of China. But you're actually saying this prolongs the trade negotiations and makes it less likely that a faster resolution will happen.
I think that's right, largely because you have two sides, I believe, overplaying their hand. China believes that Washington is coming after its economic base and can wait out this administration. I think that's a bit of a miscalculation. They also believe that the U.S. economy is going to continue to weaken, and that will affect the president. On the U.S. side, they look at the financial charts and they look at the economic data coming out, and they believe they have the upper hand, which I believe is an overcalculation on the U.S. side. So right now, you don't have, in my view at least, you don't have an environment for a healthy negotiation, much less successful negotiation.
Which doesn't bode well for the markets. Kim, great to speak with you. Thank you so much for your time.
Have a good holiday, all.
You too. Kim Wallace of the Eurasia Group. Not a good sign for the markets.
No, but I understand. I'm sort of in Tim's camp. I think Pete and Dan probably agree as well. I don't think the government shutdown is all that. I mean, it's important in the context of what's going on. I get it, but I don't think it's all that market moving. I understand why we lead with a story like that, but there are other factors at work. I do think, though, that now everybody is universally bearish, and it's probably going to be correct over the next month or so. I don't think it's going to be correct over the next 3 or 4 trading sessions.
Well, who cares about the next 3? I mean,
well, that's what we do on this show.
I know, but we're going into Christmas week, and I like.
How many days to Christmas?
I just think literally the market's going to be trading on fumes for the next week and a half.
I think the next 3 or 4 sessions. I understand what you're saying, but I think they're very important because I think the sentiment turn here is the kind of thing that we've been seeing. I think the retail community I mean, the amount of people that I saw were freaking
out on a
but it
holiday
has.
week.
I mean, no, it can,
turn.
especially when there's no liquidity in the market. I think you can have an exaggerated effect when people are actually running for the door when they go off to, get their
to the
fruitcakes
downside,
and
you
their
mean.
whatever their Christmas cooking.
You mean the Christmas nightmare?
Yeah, well, look, I just think there's a couple things going on here. I think sentiment to me in the RIA community and in the retail community is starting to become unglued. And that is something that in a low vol environment, especially with these headlines, I think is worth watching.
I mean, if you're trading right now, you're home alone.
Oh, look at you.
Mr. Wallace is talking about downside risk, and obviously we all think about that, but I think there's a lot of short-term moves within that. So to answer Guy's question about the next 3 or 4 days, I think we could see some ups and some downs.
Yeah.
And as a matter of fact, we're seeing some bullish activity here and there. We're also seeing a lot of bearish activity. Everything is very short in duration in terms of what people are expecting. And it's been like that, Mel, for about a month or more, where all the trades that I'm seeing, whether it's in big ETFs, the spiders, you name any one of those big ETFs, I'm seeing stuff that's happening very rapidly. And we're seeing these moves, and they're playing out pretty well for the most part. But we're seeing a lot of that. Just last night, Mike O was talking about the protection on the downside that he was seeing in the triple Qs. We see stuff like that every single day, but it's all very short in duration.
The higher we go this week into the new year is the lower we go into January.
But there's trade in between, right?
Like that.
You're without a Santa Claus.
Dan's a diehard.
I mean, heat miser, snow miser.
See what I did there?
Yeah.
Nakatomi Plaza.